Good afternoon, everybody. Today we have a very interesting session here on the CedarIBSi Lab webinar series. We are going to be talking about fraud and AML and the analytics and the data that goes behind it and how it's been changing in today's rapidly evolving compliance environment. We have a very eminent panel today. We have Balaji Suryanarayana, who is the founder, director, and chief operating officer at CustomerXPs. He's been there since 16 years, Balaji, so nice long inning. And before that, he's spent time in Accenture, Infosys, and Wipro. So a true IT guru, as one would say. And joining him in our panel is good friend Rahil Iqbal. He's the managing partner at Code-Based Technologies. He's been driving the organization since the last 12 years, though I've known him for much longer than that. So welcome, Rahil, to the webinar. And finally, we have an extremely eminent personality from the banking and financial services industry, who's extremely eminent in the data and analytics space. In fact, we spent the better part of the last 15 years building an outstanding infrastructure at DIB in terms of use of data and analytics. So welcome, Raza. Thank you for joining us.
Thank you so much, Murtaza, for inviting me.
Yeah, good to have you here. What we will do is we will start with Balaji's presentation. He'll take us through the offering for CustomerXPs in terms of fraud and AML capabilities. We'll then move to Rahil, and then we'll have an open Q&A session where Raza will also share some banking insights in terms of how actually the banks are dealing with these critical areas. So Balaji, on to you. Look forward to your presentation here. Balaji, thank you.
Thank you, Murtaza. I just started sharing my screen, just a confirmation that
all good.
The screen is visible.
All good.
Thank you.
Thank you.
So good afternoon, everyone. Thank you for joining today. Today, I would like to emphasize the need for an unified approach to enterprise fraud management and anti-money laundering. All this through a common integrated platform. So if you look at both enterprise fraud management and anti-money laundering, they have certain common goals, be it protecting customers from financial crime, or protecting the financial institution's reputation, addressing growing costs of various channels, and ever-moving compliances by the regulators. This is a never-ending cycle where you need to keep addressing these goals. Now, if you look at a unified single solution, there are certain benefits that it brings in. One, definitely there is a singular view of customer across the financial crime scene. Helps a financial institution, unravel the details of what is wrong and what is happening. It also is going to help you bring down the total cost of ownership as against multiple systems. But then it is also fraught with a lot of challenges. One, ever-increasing channels and the need for integrating multiple times with newer payment methods, newer transaction processing engines, and so on. You need to consistently look at what the regulators are saying, where the regulatory compliance requirements are changing every day, and so on. These are some of the challenges that you come across, right? Now, if you look at the analyst view, a whopping over 70% agree that there has to be a single integrated solution for both fraud and anti-money laundering. And if you look at some of the tier 1 banks or financial institutions who use a unified solution, they say they save about 30% in investigation costs, cost of ownership, as well as cost of generating reports to the top management, and so on. So all these are major benefits that comes across if you unify FRM and AML. Now, if you look at some of the key aspects that the unified solution brings in, one on the operational side, it brings ease of training your people because it's a singular platform, and it also helps overlapping teams to work together. If you look at the line between financial crime or enterprise fraud and money laundering, it's thinning a lot. Even the regulators of the view that you should straddle, the system should straddle both aspects of EFM and enterprise fraud management and money laundering. Now, a common IT platform, will help you build this, building block between both anti-money laundering and fraud systems, enabling a whole lot of CapEx savings, as well as resulting in low maintenance costs. Now comes the single important point. What about the data? Both these areas, if you look at anti-money laundering and fraud prevention and detection, it relies on how effectively a financial institution is able to bring its data to the point of analysis. And there is an increasing expectation that this needs to be real time. You should have the current data immediately, and not just the data should be cleansed and prepared for the analytics to run. There has to be a seamless availability of data. Now, a unified approach helps you definitely bring this data, that you have common touch points for integrations across your source systems and transaction processing systems. And whenever a new interface point comes in, it saves a lot in terms of maintenance costs for coming out with these new integration pieces and so on. Moving on, an integrated approach definitely breaks down the silo between the investigation teams per se. That's both the fraud management teams and the compliance teams. Increases the collaboration among the investigators. You see a unified view of the customer. Whenever you look at a case, you get a view of both what has happened from the fraud point of view and what is happening as part of compliance, and are there any deeper trends which are shown in each of these entities pointing to money laundering. All right. Now, if you look at our stack, that is Clarify stack of our unified fraud and anti-money laundering systems, there are a whole lot of common components if you look at it across both fraud monitoring and AML systems. If you look at data ingestion, right? So these are the same systems that you need to integrate with, and there is an increasing need of doing this, ingesting data in real time in event streams. There could be certain systems where it needs to be done in different approaches, be it batch or near real time, depending on the capability of the system and the nature of the transaction processing that the system does. You also need to integrate with third-party systems, partner systems, especially when it comes to trade instruments and so on. A financial institution can have multiple partners and partner systems which are feeding into the bank's core systems, and you need to integrate with them to be able to address your fraud monitoring and anti-money laundering needs.
Balaji, this is the same stack, right? Fraud and AML are dealt with by or they are two separate integration points.
Absolutely, this is the same stack. If you look at the the right bottom half of the screen, you look at the data ingestion, the real-time monitoring and decision, and so on, and the enterprise operational capabilities. Now, this is the common stack on which you see on the left, you have the common components, the EFM or the enterprise fraud management components, and the anti-money laundering components, which work on the same platform, leveraging single point of integration with all your source systems, not having to repeat integrations between anti-money laundering and enterprise fraud management, decreasing your costs for making the application highly available, your DR costs, and in general, the operating costs and data security costs. So because you are looking at having just a single interface with all your source systems. Now,
and is available on cloud, or how does it work, or on-prem?
Absolutely, absolutely. So we are seeing that increasingly there are fraud being a very sensitive area for financial institutions. So long there has been a view that it needs to be an on-prem kind of a solution, but we see of late there is a wider acceptance of cloud, both in the anti-money laundering and the enterprise fraud space, which helps them. I mean, if you look at the trend these days with the onset of online payment channels and explosion of payment mechanisms and so on, to address the change in traffic in terms of how a transaction is done in a bank and so on, resulting in how you scale out your systems, there is far more acceptance for moving on to the cloud per se.
Yes.
So CedarIBSi is makes this stack available both as an on-prem system or an on-demand cloud-based SaaS system. Right?
SaaS system.
Right. So now, if you look at this stack, you see a whole lot of specific application features. So you have risk-based authentication. You have IP geo-intelligence, which is required. Customer onboarding has a specific set of features which needs to be provided. Regulatory reporting across your fraud reporting and compliance for anti-money laundering reporting. More and more, money laundering is shifting to trade-based instruments these days. So you need to look at trade-based detection, compliance to KYC norms, FATCA norms, and so on. So now, if you look at the underlying data, the platform ensures that it is a common data which is available. Architecturally, it is a common system, but it meets the different requirements of anti-money laundering and fraud management. But at the same time, it helps you have a common platform for investigations and interactions between two departments and so on. So if you look at the global enterprise fraud market today, there are some emerging trends which are coming up consistently, and we are seeing it across our customers who are live with the CedarIBSi as a unified solution to AML and enterprise fraud. On one end, there is a convergence of how fraud and AML is treated and how they are being investigated and so on. So there is a widespread convergence of these two, operations at a financial institution. Increase in trade-based anti-money laundering compliance. The need for a real-time integration, even in the space of anti-money laundering. Fraud was real-time for a longer time because you need to detect and prevent fraud as it is happening. And AML was more of a batch-based approach, but increasingly due to regulations, due to the risks that financial institutions are seeing and so on, there is a big pull for real-time integration for anti-money laundering as well, including making it available as an API-based approach for the partner ecosystem as well. It is not just anymore about the systems that are run by the financial institution itself. So you need to look at multiple trade partners that you deal with and so on, and should be able to prevent anti-money laundering from those systems as well. So there has to be an API-based approach. And increasingly, it's looked at entire core banking system needs to be integrated in real time, which is where the problem or the challenge of scale comes in. So you can look at channels at silos and look at fraud and compliance for channels, which gives you a different view to the scale. But once you look at it from the full-fledged core banking integration, then the scale multiplies multifold. So I mean, that is one area which is definitely emerging now. And more and more, there is expectation that the systems has to help in the investigation process. So with compliance or regulation turning out multiple scenarios that needs to be monitored by the bank and the financial institution. Now it's the turn of the solution providers now to see how can you assist in investigation. So you need to have a graph-based contextual approach, bring in intelligence at the point of investigation, the ability to classify incidents and cases based on how risky they are. So this needs a unified approach. So you should be aware of the contextual importance of a case, both from fraud and anti-money laundering point of view. That leads to an identity resolution becomes an important factor here. Now before you step into the realm of unified case management for both anti-money laundering and fraud management, there has to be sanity in terms of and clarity in terms of the identities of customers within your system. So there is a big need for ensuring that there is a robust identity resolution module even before you onboard the customer and on a regular basis. These are some of the key, growth areas which are emerging, and all this points to a unified approach is going to be the answer to have an effective enterprise fraud management and money laundering solution. So that brings me to the end of the presentation. So Murtaza, over to you.
Thank you, Balaji. Thank you. I know Raza, we'll just head to Raza for a quick question. So Raza, in the banks, I mean, how do you see the role of data analytics, especially in the whole risk management function which covers fraud, AML, various other elements,
So if you see, Murtaza, thanks a lot. So if you see, I'll break it down into two. One is the analytics piece, in the overall risk management as well. So analytics makes it possible to measure, to quantify, report, and even predict, with more certainty than what we have seen before as well. And it's basically give us the intelligence when it comes to the tactical and the strategic decision making as well. This is the analytics which is critical, for the overall risk assessment. But if you see, which is basically the pertaining, to the business side of the bank as well. So I'll just let you know that it's basically, very pertinent risk to the bank, whether it's a credit risk, operational risk, portfolio risk, market risk, you just name it. And some of the application what analytics are using in order to cover or mitigate those risks is the risk scoring underwriting. Okay. So just, I think in every bank, if you see, particularly for the retail, customers and for retail financing, we use another scorecard as well. And we have got STP and we have got so many other parameters which we see. And it brings us basically, the improvement, the fantastic improvement when it comes to the turnaround time. We know our customers, better than before. Let's put it this way. Okay. One of the other application, what we have seen, particularly in the banking industry, credit line management, combining, customer information and the market insight. It also helps us in reducing the provisioning of the credit losses as well. So because, we run, the risk analytics and we come up with some predictive modeling as well when it comes to the collection piece, recoveries, and so many others. And if you see the other components where we use analytics is the AML side risk management as well. Sequence analysis, optimizing, the first false positive rates, and so many other stuff. Other thing, what I'm sure you guys must have been aware of, the analytics also we are using for our, regulatory requirement as well, like Basel, like central bank compliance, like, so many others as well. So analytics, initially, we were under the impression analytics only used, for the business purposes, but analytics now has got, different parameters as well. It's not only confined to the business side. It's equally important for the risk management, even for the customer, experience and for the other stuff as well.
Sure. Thank you so much, Raza. So we'll come back to this. We'll keep this at the back of our mind and we will take it on once we come back after Rahil finishes presentation for a Q&A session. So Rahil will get you on next.
So as Balaji and Raza mentioned, it's now all about a full holistic approach. So we cannot see fraud in AML in a very siloed approach, be it as a vendor or be it as a bank. An integrated framework and a digital approach is a new way or a new trend coming out in the market. And code-based technologies being one of the leaders in the region, helping digital and neo-challenger banks in the region. We've been actually bringing those approaches and frameworks to our clients, helping them move from a traditional legacy approach of how we look at fraud and AML and moving into a digital era and a format where we're able to move from a reactive position to a preventive situation. Balaji also touched upon the key trend PwC highlighted in terms of how banks are actually, or financial institutions are looking into implementing an API-driven approach, which gives them a much more visibility. And as Raza mentioned, that analytics give them a full approach, not just at the fraud and AML perspective, but even helping them on other risks side as well, which is very important today, both from a deposit and from a lending perspective. So we have been working with regional institutions over here who have been into the digital space, including Kuwait Finance House, Dubai Islamic Bank in Pakistan, Zand Bank, Blink Bank in Jordan, Capital Bank, and we've been assisting them to look at how they can actually practically execute and implement an integrated approach when it comes to fraud and AML. Our framework, when it comes to fraud and AML, looks at 4 critical things. First of all, we should be looking at across the ecosystem of the digital landscape, not siloed even in terms of the application which we are dealing with. So it covers customer facing interfaces like your mobile and in your web. It looks after the core systems, not just the digital core, but also other core systems as well, the likes of loan management, the likes of credit card management, and so forth. And very importantly, fully integrate the data management aspect. So to collect data, to process data, and to then give out recommendation that how, through an analytical layer, how to basically enhance on an ongoing basis. So first option, the first aspect of a framework is to create all those preventive measures which we can from the beginning of the customer's journey, not at once a customer has been boarded and then we reactively look at his transactions for fraud and monitoring, but we look at from a very holistic and from a very initial stage, from cradle to grave, basically the concept is. So we prepare preventive measures starting from account onboarding, because today all of our clients are into digital account opening. So there are no more those physical touch points left of branches and everything. So these are all neo-digital banks who are onboarding customers on a self-service model. So a lot of preventive measures have to be built up front as a gated, so that it protects the bank and protects the customer on all of those fraudulent related activities, fraudulent identity management, and transaction when it comes to AML. So we have built a complete layer protecting the bank and the customer upfront. Then there are benchmarking. Traditionally, what institution used to do, they used to look at the customer's inputs. We used to ask customer, who are your top 5 suppliers and top 5 buyers? We used to put rules around those only, but we never used to analyze what they are doing, and then we reactively used to find out that, okay, the transactions are happening in a very different manner than the customer profiling. So what we do is we help customers actually gather data on real-time transactions and be able to feed that information into the data engine to come up with the right benchmarking rules. So the rules, the customer might say, I'm dealing with an X organization for an X turnover, but in the next 3 months, we see there are no transaction for this customer from this supplier or from buyer. How do we react to that as well? Or what he's doing is completely opposite to what he declared. So our model is to look at the actual data, and in certain countries, we're able to even utilize open banking data to identify the real customer profiling rather than what we ask customers to input. So that's very important from a preventive measure perspective. The third is not just looking at transaction, but also looking behavior across customer touch points. To give you a very good example, imagine a customer has a debit card. The debit card is used on a POS machine in America, and the next minute we see him logging onto his mobile app from Nigerian IP. We are able to identify these behavioral transactions both in a very real-time manner, and identify that there is a possibility of a fraud, because the transaction was on a point of sale, which is a physical device being used, and then there is another IP being used to get into a mobile account. we do not treat those independent incidents separately. We look at on a holistic manner, and we're able to feed this information into a central engine, which is actually looking at both transactions and behavior statistics of a customers, whether they're doing balance inquiry, they are doing using the debit card on e-commerce, or they're using a physical card for that matter. So that is an important aspect to bring all of those transaction and non-transaction behavior together. And the most important part is ability to actually continuously assess your models. It's not the old school type that you put your models one place, you load the rules in the engine, and that's it. You look at after 1 year or 2 years. Here you have to look at on a continuous basis as your customer base is growing, your segments are changing, your transactions are changing. You should be in a position to continuously assess your benchmarking rules on real-time data and real-time insights, and be in a position and an agile position to enhance your policy around it. Rather than looking at a very traditional model of policy making, you need to be agile in even policy delivery as well. So these are all those framework elements which requires technology support, but technology is an enabler on all of this. This requires even the management buy-in, the bank's internal stakeholders buy-in, processes around it, and technology just wraps around all of this. So it would be not sufficient to say that just by investing into technology, you will get the benefit. You need to have a holistic approach and a framework to fight fraud and AML.
So Rahil, just a quick question. A lot of these clients you have, I'm sure some of these clients are new age banks, challenger banks, neo banks, right? They don't really have a track record or a huge amount of transaction data or huge amount of customer data already existing where you can have some trends, analysis, hypothesis on the data, right? A lot of the data is now coming on new as the new customers join up to these banks. So is the fraud AML analytics any different for the new banks as it would be for the banks where you have good existing data available for analysis?
See, we work with both kind of institutions.
Yeah.
So a lot of our clients are tier 1 banks in the region who are utilizing their existing branch data and then porting out to the digital environment. But yes, the data sets are a bit different because previously we used to rely on what customer was telling us, not what customer was doing. So a lot of time we used to ask customers, example, where would you like to, how much spend you would have, how much income would you be expecting, how many buyers and sellers do you have, which are your main top buyers and top sellers. So it was more customer input based analysis. Today in a digital environment, we do still look at it, but we give a low weightage to that information and we give higher weightage on its utilization. So we are able to identify in the first 6 months of his relationship, where is that account going. See, today this data with the traditional banks would be available. As you rightly said, the challenger banks do not have any other option. In certain cases, yes, we did access open banking data, but that is also very limited in terms of segments, retail only, or in countries like Bahrain or in the UK and so forth. So we are actually utilizing open banking data in the UK right now to identify the trends and what are his income, what are the main kind of transaction he does on a recurring basis. So yes, those data are still being utilized, but the actual analysis or actual preventive measures are done on multiple scale to protect the institution. When we talk about the first aspect of the model of the framework is the onboarding element, right? So we need to look at preventive measures, what we look at from a very beginning of your relationship with your customer. So a preventive and an integrated approach for fraud and AML risks, it covers not just the element, but also the risk associated with, as rightly mentioned by Raza, that it goes beyond just the portfolio risk or anything, the credit risk and the operational and the reputational risk. So we look at it holistically, where we are looking at doing digital KYC, we're looking at fraud management, we're looking at spoofing, we're looking at identity security. A lot of times in the digital world, people would be able to utilize someone else's identity very easily as compared to a traditional branch, right? Where someone has to walk in. Here, because it's a self-service model, you have to be extra cautious and you need to prepare much more gated facilities so that you're able to identify those cases as well. So identity spoofing, you're looking at upfront sanction screenings, PEP and media screening as well on a real-time basis. So, and it does not impact the customer's experience as well. So we need to balance customer experience with all the required preventive measures when we're doing fraud and risk management. So we're looking at document forensics, what a customer is scanning, facial matching, selfie check. Even in certain cases, we take the customer to a video call functionality where we're able to identify even high-risk customers or high-risk transactions for that matter, to give that experience of a teller or a branch where you have a relationship manager who's actually over-signing your request for certain things or certain threshold limits. So we basically give a lot of aspects in terms of automated processing and look at holistically the digital KYC element. So when we talk about the holistic compliance model, we look at main 9 steps. So capturing of the information, identification of the person, gathering data from external sources. So be it your sanction, be it your local blacklist, looking at your credit history. A lot of information is being made available today, which can be utilized to identify fraud and potential AML behavior risks. And we basically orchestrate it accordingly to the end where we archive information for future use, feed it into the data engine to ensure that all the data is up to date. And as the customer is doing transactions or doing anything, his profile also keeps updating in real time. So that's very important.
So all of this is taken care of while the customer is being onboarded, right?
So we look at completely onboarding while using the interfaces like mobile and web, while doing a transaction at a POS machine or an e-commerce, and looking at post facto services where a customer has requested to change his address. The customer has requested to change his.
So would the system also do like a retrospective for customers who are already on board? Will there be a continuous check on the customer data set that is already on board, saying, flagging people who may come onto a AML checklist or a fraud checklist later on, not while he's onboarding?
So typically what we do is we have a very robust framework when we talk about continuous monitoring. In one of the cases where with a local digital bank, we ended up doing at an onboarding journey where there was a check. Then every 15 minutes, there is a review of transactions which are coming through, which may be not like FTS or IPI transaction. There are on real-time on transaction, real-time on access to the mobile devices. We look at card and e-commerce transactions. We look at even changes in their profiles, mobile number change, request for address change, request for email change, all connected to the extent where a merchant is even giving a refund. Even to that extent, we're able to identify, link it to a customer and to his behaviors to see what is going on. It's not about just a simple transfer coming in or transfer going out, but there are a lot of use cases which we have identified even at merchant bulk processing, remittances, refunds coming from merchants, your access to the mobile apps, how transactions are happening, at what time you're changing your passwords, how frequently you are changing your passwords. So all of this combines the data and gives a very holistic approach.
And Murtaza, what Rahil said, absolutely right. And it's a very robust briefing what Rahil has given. The other thing which for the existing customer, for the banking perspective, we do this KYC on a frequent basis as well. So whether the customer is existing customers of the bank, it doesn't matter. So we do this KYC on a periodic basis. So it means that, okay, at every point of time, we make sure, okay, we keep an eye on our customers.
On our existing customers also. Yeah.
Exactly.
Because today you have to, otherwise there is no, it's a very difficult situation, because how the data is flowing in, even from an international sanction list today. Look at today's situation where there are typical wars happening, there are typical sanctions being introduced on a daily basis. You cannot wait for even those long periods, rightly said by Mr. Raza. It has to be on a continuous basis. We, even in certain clients, we have implemented a daily monitoring mechanism on customers' profile, right? And utilizing this technology in automated processing. And what happens once you identify? See, identification is only one aspect. What happens post you have identified the customer, that he has moved from a low risk to a high risk, or from a non-PEP to a PEP, from a non-media to a media screen, to a non-sanction to a sanction? What do you do after that? That is also very critical. So we feed that information back to our customer channels to able to ensure that we are giving the right information, not too much information to the customer as well, to protect the bank. And how do we mitigate if there's a false positive? So false positive management is also very critical when it comes to customer experience. So as I mentioned, we look at applying the measures upfront during the CDD and the EDD process. So that's critical to start preparing the profile of a customer while he's opening the bank account. You can even make checks today, like from his metadata from his phone. How old was his phone? When was the SIM issued? Is this a repetitive phone being used to operate multiple accounts? A lot of metadata is being made available today to feed into anti-fraud management. So it's just not the traditional information that, okay, I give you my ID card number and you go and do a check on it, or you find me on a sanction screen. Look at their mobile devices. If the same mobile device is being used to open 10 different accounts at the same time, then we even block that IMI device as well. So you can go up to that extent of a very integrated preventive measure. And then in the last, because then we are consolidating information and data from transactions, from the initial benchmarking, customer behavior, how customers are moving onto the devices. And as we know, mobile is the most utilized device today for any purpose. So we have that leverage where we are able to access the data in a very privacy manner. It's not intruding anyone's privacy, but protecting the bank, that how a customer is behaving, how a normal customer would behave as compared to a fraudster. So we're looking at a holistic fraud and AML combined together, and then being able to identify and rectify and resolve at the same time in a very automated manner. And that's where the difference you see today in the traditional mindset and the approach and the digital framework, which modern banks, tier 1 banks and neo challenger banks are introducing in their process.
So that's it. Thank you so much, Rahil. So just coming back to you, Raza, you did mention the role of analytics, and in the good old days where data and analytics primarily was used for business and business growth. Right now, it's as important for fraud, risk, compliance, AML, etc. So is data treated or formatted or stored or marted differently for business versus non-business use, or how do you work with data?
It again, you are absolutely right. Okay, if you see, look, now the analytics of the data we use not only confined to the business side, only for risk management, customer experience, and everywhere as well. And again, we have got different applications like SaaS. SaaS we use for not only for the analytics, even we use for our scorecard is basically based on the SaaS as well. Okay, our so many other data things which is used by the finance. Okay, they are also on the platform of SaaS. But the good thing we spoke about risk side of the analytics, but don't forget, okay, the prime objective of the analytics is to bring the business side.
Yes.
So if you see the business side, I'll just take a couple of minutes on the business side as well, and it is very essential and it is very pervasive as well. Why I'm saying this, because if you see what the bank or the organization they need to acquire the customers. Okay, they need to acquire the customer. They make sure they activate the customer. They make sure they give the product to the customer in one way or the other, in the cross selling or upselling or whatever you want to call. You make sure you retain the customer. You make sure, you should not lose the customer by having that attrition. And those who have left us, you make sure, then bring them back and giving them some win backs as well. So this is, as I said, this is only, you say it is the business side, of the analytics. What other, and business analytics who are using this? If you see, sales people are using it, retention people are using it, customer lifecycle management. I just spoke about start from the acquisition piece to the win back as well. They are using it. Risk side is using it. Risk side, when I say the fraud, the front standing, and the operation as well. And just to let you know that, if you see now in every organization, particularly for the banks as well, whether you want to come up with the pricing piece, whether you want to come up with the policy side, whether you want to come up with the profitability side, you make sure, use the data and analytics in the right manner as well. So let's say whether you want to come up with something, and your predictive modeling should be very, very robust, whether you want to offer the NBO, which we call next best offer, the NBP, next best product, the CLV, the customer life, value, and you just name it. But you have to have the mix of both the artificial intelligence and the machine learning as well to come up with these models. And just to, I'm not privy, to give you the numbers, but just to let you know that in the start days, when we were only in the first phase of analysis, where we said diagnostic and and descriptive as well. And if you see today the predictive and the propensity, we used to contribute around less than 5% of the business. Now it's 1/3 of the business we are generating because of this analytics as well.
Absolutely.
So it is very important, very permanent. The organization cannot live without that. And this again, I said, fine, data is the key. So data again is not only confined to the business side. Data pertains to the entire. You just name it where you want to use. You want to use even for the risk side, for the operation side, for the analytics side, for the AML side. You just name it. You get everything there.
Thank you so much, Raza. Balaji, coming to you now. Obviously, we talk about new technologies, advancement in fraud management, AML systems, stacks, and so on and so forth. So as obviously you and various providers move forward on the technology line, even the sophistication of the frauds and the people who do these obviously are improving probably at the same or slightly better rate to be able to do that. So how do you, how does that circle work? How do you ensure that, you remain one step ahead of the curve, as you say?
Absolutely. So rightly put, I think the fraudster is always a step ahead, right? So he's not being chased. So he takes multiple routes. So yeah, from that point of view, let's say he's always ahead. So the key here to be able to, like rightly put by both Mr. Raza and Rahil, financial institutions moving to more to preventive kind of model and so on, right? So you need to have a mix of two things in your, in your armor. One is how easy is it to tweak your systems, tune your systems to different changes which is happening in the landscape. Now these changes are not unidimensional. So now on one side you have changes coming in through newer and newer digital channels, payment systems. If you look at geographical variances in terms of how payments are made, it's vast now, right? And now there are interoperability across geographies. All these are happening. So that gives you one dimension. Then on the other dimension, the kind of frauds which are evolving. I mean, when the entire ecosystem moved from let us say magnetic stripes to the embedded chips and so on. So the frauds also evolved. I mean, with change in mode of operation, frauds also evolved and so on. So now you need to have a robust system which gets us to two things. On one hand, you should be able to update your rules or scenarios or whatever it is to detect frauds in real time. Update them and the ability to test and deploy them very quickly with changes in the fraud ecosystem, number one. Now, this is in case you have a known pattern or a new pattern is emerging, you get to know about it, you should be able to very quickly tweak your system to address these new patterns. Now, what about patterns which you don't know yet, which is where rightly put by Mr. Raza, we should be looking at other capabilities like AI and ML models, which is giving you predictive scores, albeit a bit explainable, meaning again, regulators come up with another measure which they say, hey, it should be explainable. Whatever you're doing should be explainable, and it should comply with all sorts of norms in terms of treating customers equally and so on. So from that point of view, it has to be explainable as well. So this is where you get the other side of other capability that system should support, which is being able to detect your patterns based on historical happenings and new patterns and anti-patterns and so on. At the same time being explainable. So these are two important factors.
How does it work? Are your algorithms updated? I mean, on real-time basis, because you need to be quick, right? As you keep noticing some trends. So how does?
Absolutely.
Are you doing that on a? You can't have a periodic end of month kind of thing, right? In this case.
So two things you need for this, right? One, your data should be current.
Right.
Because you're saying it cannot be end of month, obviously, because you need to keep up with the fraudster. So it has to be current. When I say current, a transaction happens through your system, that data point should be with the analytical system right then, there. And not just the raw data, it has to be cleansed and the prepared data where an analytical engine can run. So this is something very, very intrinsic to a good enterprise fraud management system. It should be able to first integrate in real time at scale to look at all your customer transaction across all your touch points and so on, number one. Now, the second thing is this data should be in a way it is prepared and ready for the models to run on it and bring the output of the model to the point of interaction, right then and there. That is where we see that a good enterprise fraud management system should internalize this data. I mean, we have Clarify running at one of the, let's say, Mashrak Bank in the region, where there is absolutely no lag between all the transactions, the 100% of the customer transactions happening through any of the channels to it hitting the analytic engine, which handles enterprise fraud, which is Clarify in this case, right? So now this helps you use this data both for fraud prevention at the same time, because you have prepared data, you have your entire analytics engine working on it and take a anti-money laundering approach to it and so on.
Super. So that, Raza, that brings to the point that while what is the need for online?
Murtaza, just a minute. What Balaji has said, okay, I'll give you the mix of both, where you have the business side and the risk side as well. Okay, and once I quote you this example, you will come to know exactly why we need this. Okay, and the person like you, of course, you can afford to have Rolex, once or at least once in 3 months, this and that. So let's say if I want one customer. He walks in the mall. He bought Rolex. Okay, the Rolex is $10,000. That's the cheapest one. So it's 37,000 dirhams equivalent of this. Okay, what is the current practice at the moment? We are following, other banks are following that. Okay, we have got our own ENR team, which is basically their job is to see these transactions and call the customers as well. And at the back end, we see whether the customer is good to the bank. Okay, we can give him some EPP. When I say EPP, easy payment plan. Okay, so in next 48 hours, the customer who bought this watch, okay, he normally gets a call and he said, look, thank you so much, congratulations, you have bought this. Look, if you want to, instead of paid in one go, okay, why don't you pay 24 or 36 installment as well with a very nominal fee. So the guy has to make his mind whether to go for it or not. Look, this is not the real time. So what is the real time? The moment, okay, he executed the transaction. Okay. At the same time, my score engine, which I say scorecard, which is again my operational risk management thing. Okay. It basically runs it and he says whether the customer is good to the bank, EPP allows, as per the DSR requirement as well, go for it and just offer him then and there. In 30 minutes, if you go, in US or somewhere, the other developed country, in 30 minutes, you get an SMS. Instead of paid in one, you pay in 24 installment. This is a fee, 750 dirhams, whatever it is, press 1. The moment you press button 1, okay, then and there in the back end, all transaction, happens and, the deal is executed. So instead of waiting, for the 48 months and get the things done, you can get the things done in 40 minutes, provided you have a robust and the strong data tool and analytics system.
So that's my question, Raza. I mean, I hope you have not answered it before I could ask it. But in terms of, and I'm not talking about any particular bank, in general banking industry, how ready is it with real-time data availability? Because all this depends on good data being available immediately so that fraud, AML, risk can be picked up, right? Otherwise, if the data is not available, there is a lag. So in general industry standards, where do you think the industry is, Raza?
It is getting mature. It is improving. I just talk about the other banks as well. The data quality and the data availability, what we used to have and currently what we are having, it has evolved. I can see again there is always room for improvement, and this is what other banks are doing. We are also doing. But just to give me please don't get me wrong. But what I have seen, let's put it this way. I want to know, how many activate or dormant customers I have, activated customers or dormant customers. Now, let's say if you run a query, every department, the bank or everywhere, they have their own definition to quantify about the dormancy and activation as well. So initially, none of the banks are having, even a data dictionary as well. Data point data. And second thing, the quality of the data is also very important. First of all, in order to generate any query, you make sure, you can take the right. So basically if you see it, it's a phases. First, you make sure you have the correct data. You have adequate data. You have, the adequacy of the data, the correctness of the completeness of the data is also very important as well. Once you have the data, then you make sure, you must be having the good data warehouse as well, where you basically put in everything and you make sure whenever you want to run a query, you can do it. And then you need to have a good platform, to run, these things as well. So it's not a one thing job. It's basically so many, vertical you have to put in, to get the required result as well. So if you see, where are we in terms of real time? I'm not saying we are every bank. I don't know about other banks, but what it used to be and currently what we are, we have,
More significant.
Exactly. But I not say real time. I don't know whether right term to use as well. It's near to real time.
Near to real time, right? I mean, it's better than the T-1 data that you are getting.
Exactly. Absolutely right. Absolutely.
Super.
Yeah.
Rahil, obviously you spoke a lot about onboarding, mobile channels, digital. So putting in these robust eKYC, digital onboarding practices, removing the fraud, obviously, what do you think is the business-related business impact and the challenges that it overcomes for the banks, or the confidence it gives the banks to move forward in terms of going out there and not worrying about being, all these areas of fraud, AML?
See, this is a very critical gate for any institution, because that's where the fraudster tries to come from. Right. So a lot of effort and a lot of investment goes into protecting this aspect of the business, but it does not stop over there. It's a highly protective zone, but it becomes a base for you to look at all the other related behaviors. So on onboarding, a lot of time you would look at identity fraud. So it may not be a fraud from a transactional perspective, that the transaction might be genuine, but the identity fraud is happening. And we've seen in Europe and Americas, this has been a very critical area of conversation between the regulators as well as the financial institutions. So identity fraud is a very important aspect which we look at from our perspective as well within our onboarding and eKYC journey. That protects the customer as well as the bank for any refunds or any the chargebacks and so forth. Once you go through that cycle, at least you reduce the risk factors for those customers in the short term. But of course, going forward, you cannot just rely on that. So hence we look at not just onboarding, but onboarding, post-onboarding, his activities on his devices, his activity on his transactions, his activity on his profiles. What is he doing? How is he doing? Does it alert us with any behavioral traits which we need to look at? So it goes beyond the onboarding journey.
Leveraging multiple databases and touch points for this, right?
It has to be, and it has to be near real time. And yes, I agree with Raza. The industry has matured in terms of accepting that this is the need of the hour. A lot of banks have already invested into such near real time systems. Now the objective is how effectively do we utilize them? The investment is there. People have invested a large amount of money into data warehousing, in data analytics, into AI and ML modeling. Now it is, how do we utilize efficiently? How do we practically utilize it? How do we push it back to a continuous process improvement and continuous policy enhancement? That would be what we would be looking forward from the industry in the near future.
Super. So Balaji, a unified framework, as we spoke about for AML and fraud, one of the key challenges, obviously, seamless and real-time availability of data, as we just spoke, that is current. So how does that unified framework address that challenge of availability of data?
Yeah. So if you look at fraud or preventing fraud as a use case, or as a business use case for a bank, it goes without saying you have to be real time. So that is one area where there is not too much resistance from banks to connect systems in real time, because you have to prevent and protect banks in real time. So at the point of like Mr. Raja mentioned, it should be at the moment of truth for the customer when he is doing a transaction. That is when you need to be able to both intervene and present your intelligence, actionable intelligence, be it blocking the transaction or tell him a EBPP product or whatever, the next best product, or at that moment of truth for the customer, right? So now this has two challenges. One is the heavy lifting of the analytics, which you have to do on one hand. The second is, how do you maintain SLAs in terms of response times to these channels, because there are strict response times on every channel, because there are multiple parties involved here and so on. So now a fraud system being designed to address such challenges. A good fraud system, let's say, like Clarify, you not only guarantee a SLA or a response time, you also ensure the entire intelligence gained is also brought to the moment of truth. Now, this is only possible if you have internalized data. Internalized data in a way that you have cleaned it, prepped it, and made it available for analytics on demand and make it available real time. So with this addressed, now this gives you a good platform for the analytical models for, let's say, anti-money laundering, or even cross-sell, upsell, and so on, run on that and use the same infrastructure to push it all the way up to the point of interaction. So a unified model where you look at fraud, anti-money laundering, and CustomerXPs as sides of the same coin. That is when you get the benefits of the platform you have put in place.
Excellent. So Raza, Balaji spoke about obviously a unified platform for AML, for fraud, so on and so forth. Obviously, these are all strongly interconnected along with KYC and so on and so forth. So internally, considering there is a unified systems, is internally within banks also thinking of unifying these as functions organizationally, so that you look at it similar to how systems are available, how the industry is looking at it? Where is it? Is it moving forward in that direction?
It is absolutely right. It is moving forward in that direction. Look, but if you see, look, we have got different departments. Risk management is one of the department. Okay, operations, finance. Okay, analytics. Okay, these are departments. But we know, okay, the data warehouse is there. Okay? That is basically the key thing. Now, as per your department needs, okay, whatever the analytics you want to do, you can do it. You can. Okay, so let's put this. I'll just quote you one example. Okay, we spoke about risk management. We spoke about the business analytics. One of the other thing. Okay, let's say we have got the customer experiences. Now, customer experience. Okay, it's also we are using our data for the customer experience as well. And a post-pandemic, okay, where the customer is so savvy about the about the digital transaction to happen with the accuracy of the security as well. We thought on those lines as well. So as I said, okay, fine, no doubt, we have got different department, the buckets there, okay, who are using the data, and we have got their own our platform as well to utilize the data in a better way. Now, let's put it this way, that okay, the platform is maybe different. Let's say if someone is using SaaS, someone using the other things as well, that's a different thing. But the core is there. Okay. So risk management is as we spoke about. Okay. The second thing is a business intelligence when it comes to the business side. The third side is the customer experience. Now I'll quote you a couple of things on the customer experience as well. Omni-channels. Okay, so we make sure, okay, whatever the touch points we have for the customers, okay, it's synchronized, okay, and the customer gets the same feeling irrespective of whatever the channel is using. Okay, how you do it? Okay, you can only do it provided if you have good data analytics. Otherwise, you won't be able to do it. The self-service, capabilities. Instead of whether the customer go to the branch and get the things done, he should get the thing done through our channels. Okay, whether it's IB or whether it's MB, whatever you want to do. The intelligent chatbots. Okay, so one of the examples of intelligent chatbots as well. I don't know, once upon a time, when you call 101 Ittasala, you can easily get a person there and there. Now there is no way. Okay, there is no way. Only you have to speak, to some virtual, the call center robot, to do it as well. Same thing, we make sure, okay, we do the sentiments, tracking as well. So irrespective whether the customer is a mass customer or is an affluent customer or is a high net worth customer, you make sure you serve the customer in a better way. Okay, and the last thing is a robotic, process automation. So that is also used with the help of the proper data analytics.
Super. So you know what? This is just such an interesting topic. I didn't realize I got a reminder bell saying that you way past the time. But thank you so much, Balaji, Rahil, Raza, for this interesting discussion, really opening our minds and eyes to the latest happenings and the latest developments in this area. And Raza, thank you for linking it to the banking industry, real-time basis, no T-1 year. So thank you so much. Thank you, gentlemen. It's been a pleasure talking to you. And
thank you.
for sharing your insights.
Thank you, Rahul. Thank you, Balaji. Thanks a lot. Thanks, everyone.
Take care.
Thank you. Thank you all. Yeah.
Thank you.